All right, folks, welcome to the live stream. Today is April 19th, Friday. Happy Friday, and welcome from Patreon, from YouTube, Discord. Give us feedback on the sound and the picture, and let's go. Okay, right off the gate, folks. Let's talk about what happened overnight because, when it happened, you saw what took place, which is this guy right here. Crude oil futures were up by 4-5%. If we look at the action right here, what does that say? The reaction that we've seen so far. So this is the pump that we got once the news came out, and then we got a complete erasal. The whole move gone. What does that say? It says that the market is not really concerned about the action that took place overnight. But now you see that it's holding at the bottom here. We see a bid showing up, so we're not really sure if it's over, or if this is still a problem. I would say that the risk is definitely less than last night, and that's reflected in the price right here. And you see, of course, Raytheon. If you look at these stacks, they're still holding pretty good. We're not seeing a big spike higher, but they're still holding pretty good. So we're not seeing folks taking these bets off in a big way. If you look at Lockheed, a similar thing. In the case of Lockheed, is actually moving higher in a big way. So that's what's keeping me on the fences here. Whether I say that, hey, the geopolitics is now over, they responded, they hit, it wasn't a big deal, and now we can just call it off and everybody behaves. I can't say that when I look at Lockheed Martin up by about a little over 1.5%. When I see crude oil still catching a bid, not getting sold. When I look at gold, for example, and I see that the bid, this is the bid that came overnight. Now it's catching another bid here. Smaller, but still catching the same bid. So what we can say is that the risk is a lot less than overnight, but it's still here. And that's going to be reflected in the VIX. The VIX, huge gap higher, and so we got the crossing, and all of that happened overnight. So the market participants got away with it. The majority of the slaughter happened overnight, and now you have the reversal going back to bearish momentum. The gap becomes really important. If we keep trading above the gap, and we make it eventually, say by the end of the day, above 1888, then it becomes a conclusion that the market is still not comfortable about the geopolitics. And the market is now concerned about higher rates and, of course, the performance of chips as of late. And that suggests that we'll probably head higher in the VIX next week, and the equities market will go down again. If we go back to the gap here, and you see that this bearish momentum continuing in the 1 hour, because you see this is a rejection candle, 1888. Now we're waiting for a confirmation. And the confirmation will be taking the low of this candle right here, 1817. Might as well just make it at the gap, which the high was 18. So we're just going to look at 18. If we trade below 18, beginning in the hourly chart, then understand that we're out of the woods for now. We can take a breather. And you see that the SPY here, if we look at the hourly chart of the SPY, finding the lower low and rebounding to find a lower high, which if you're a bear, again, it doesn't really impact you so long as you're keeping this pattern of lower highs and lower lows. But this rebound could decay some of your shorter term options, so you'll need to have a hedging strategy against that. Now, all of this is premature, folks. It depends on how the VIX is going to behave, but I'm just looking at the hourly chart here, and I'm seeing that we failed once. Give it the benefit of the doubt. If you look at the 15 minutes, maybe it'll find the energy. It'll find some more hedging at the end and makes it above. So I wouldn't make a erratic decision one way or the other until I see either a loss of the gap or breaking above 1888. So the VIX will guide me in the next step or in where I'm going to take the shot against the SPY. Is it going to be a put or it's going to be a call trade for next week. Okay, so that's the SPY. I'm just going to keep it here. Of course, believe it or not, folks, today's a rebound day, as the title says. Here it is. Look at the map. Majority of the market is actually in the green. Energy up. Yeah, healthcare, the majority are up. Staples are doing pretty good. Communication doing pretty good. Banks doing pretty good. Cyclicals, utilities, industrials, all doing pretty good. What's not doing pretty good? The winners, the mania names. Eli Lilly in healthcare. The Metas, Googles, big caps. Chip mania specifically getting hit. And the weight of the big guys going down impacting the S&P to the downside. Now, usually, that is a sign that the market is turning around, meaning it found somewhat of a bottom and it wants to move higher. It's just the heavyweight names are taking it down. The heavyweight names will have earnings coming next week. So they could stabilize, and if they do, then we'll see the market lifting altogether, beginning to make that rebound and form the lower high pattern for now. So my assumption till the end of the day, at least if I'm leaning one way or the other, right now I'm leaning toward, look, OPEX, you'll see a lot of short covering, profit taking, and you'll see the market maker trying to keep the tape from rewarding a lot of these puts. And I think we begin to see a rebound, and next week we build on that rebound a little more. That's my 2 cents for now. And I'm placing that based on the VIX. If things change and the VIX makes it above 1888, then okay. We have a different thing going on here. And down we go again in the equities market. Now, do we have anything? Let's keep the SPY here in this tab. And then let's see the other indicators. The dollar, is there anything important here in the dollar? It's still trading in a range, so the dollar is not relevant today, given it is Friday, and the same goes for the bond market. Let's just look at so, of course, overnight, buying of bonds in reaction of the attack, but then we see them saying, okay, no, we're changing our mind. We don't need to buy the bonds anymore because it was a limited strike. So we see bond yields higher again, although within range, so it's going to be irrelevant today. It's all about the VIX. So we'll skip on that, and then we have to look at the individual names. Of course, Super Micro, wow. We want to talk about this move here. We're talking about 18% down. 18%, unbelievable. And I left some money on the table, but I don't give a shit. I made like 2,000, 3,000% worth of gains in a couple hours. So, see, a lot of folks here, you got that positive pattern. A lot of folks here capitulated, and then boom, comes that big drop down. So Super Micro, when you see a name like this dropping 18%, yeah, that's going to freak a lot of the AI mania names, a lot of the chip mania names. And that's waiting on the Qs more than it is on the SPY. So see the Qs looking a lot worse. Although, I don't know, this oversold condition here, I think it plays out at the end. And you'll see names like, if we go to NVIDIA here, NVIDIA is struggling a little bit, but I think that NVIDIA might recover at the end. And we see the market distinguishing between, okay, ARM is weak, got it. SMCI weak, got it. But then, should we drop NVIDIA 3%? Should we drop Taiwan? I think the market might start to distinguish a little bit and pick these names higher. If the VIX, of course, continues to drop. But the VIX, if you look at the 15 minutes chart, we got to give it the benefit of the doubt that it might give it another shot and make it above 1888 at the end of the day. So, no decisions yet, folks. Apple. Really interesting that this name now trading below 165. So if you look at the hourly chart here, that's a breakdown. That's reaching the lower Bollinger Bands, expanding them to the downside. So if you look at the weekly chart, remember what we talked about here, that if this is a bearish engulfing candle, it means that this range is over, and we're probably going to retrace some of the moving averages on the hourly chart. So here we have on the, weekly chart. So we have the 200. That could be a destination. Let's see where the 100 is sitting at. The 100, we lost the 100. If we close like this, of course, the 100 is gone, so the 200 becomes, I mean, we're talking about the weeks now, folks. The 200 weeks moving average for Apple becomes the next destination. That'll be 152, so that'll be a steep drop here. So again, I'm in the camp of these earnings are not going to be good, and they'll be the catalyst of giving the market the second leg of the correction. It's not going to be the geopolitics anymore, but we'll take it one step at a time. That's Apple for you. We'll go back to the 5 minutes chart, and we'll just watch it right here. What about Tesla? Tesla, today it's relatively stronger than the rest, and it's trying to rebound really hard, but it's being dragged by the overall action in the market. I think that Tesla, when you think about the earnings report coming out next week, and you look at the chart, a lot of folks made a ton of money shorting Tesla here, all the way down until it became oversold. I think the rationale says that they're going to start booking profits before that report. Whether this rebound happens today or whether it happens, say, Monday, I don't know for sure, but I think that the Tesla's behavior today is it's trying to rebound really, really hard. So if the market finds a point of stability, if the VIX give us a clear signal that it's going to give up 1888 and it's heading down, then I think that Tesla will lead that rebound in the market. So we'll keep an eye on this dynamic. But I'm going to take your questions right now so we can answer as many of them before I have to boogie out of here, folks. Anyways, thank you everybody for joining, but let's begin with this good to buy Netflix call spread for next week, 560, 570. The problem with Netflix today is it's not going to move a lot. Okay, so you can buy, it's just going to be flattish for the rest of the day because we have to play out the options dynamic for this week. I think you're better off doing that trade Monday. It is oversold in the hourly. I think it's going to rebound so long as it doesn't break 555. That's my support. And in the daily chart, you can see that we can go back in that support from the weekly chart, really. So I think that Netflix is going to rebound, but you can wait till next week before doing this trade. Because if you buy it right now, you'll find that it's just going to consolidate and do nothing until the end of the day. And then you have more decay over the weekend. So I'd rather do that Monday, not right now. Okay, thoughts on DBC for long term. If we do the commodities index, long term, I mean, the problem with this, though, not all commodities are really trading the same way. I don't like the commodities ETF, to be honest with you. And the reason is, if we look at the futures, for example, now you see cocoa hot. It's been hot along with coffee, but what if they give up? And now we see grains catching some momentum because of the Iran news. Oil been catching momentum, metals been catching momentum, but I think it's going to be different as the dynamics evolve. For example, you might see cocoa moving down along with coffee in big percentage points. That could impact commodities indices badly. Even though you see that we have marginal gains for energy, marginal gains for metals, or even, let's say, sizable gains for grains. But just the weight of a lot of these softs that went way too high coming down could impact the index badly. So I would say you got to pick your pick here. Which commodity you think that's going to perform from this point on? If you look at grains, I mean, they've been battered, bruised. You look at wheat, but we're not seeing, I mean, we see these pops, we're not seeing anything definitive, though, that says that, okay, we've bottomed and higher we go. So we still need to see a lot from grains before we follow those trades. For now, I think it's really all about energy. So even with the sell the news today, energy is still positive, and I think that's a sign of strength. The same goes for gold and silver. So I'm going to stick with those for now, rather than going with the commodities ETF. Okay, we go back to the SPY and see what's going on here. Nothing is going on. VIX, nothing is going on. NVIDIA trying to find some footing. So is Apple and Tesla. Nothing is going on here, folks. Okay, hey Mav, I had a bad trading week. Oh no. Emptied almost all of my trading platform account with a big gamble on oil and SPY. I've gone big on ARM 75 puts next week. Do you advise waiting for 75 before or close before? Okay. First of all, we don't want to go big on one trade. You don't go all in one trade because the odds will go against you. You got a 50-50 chance, really. You don't want to put your life savings on a 50-50 chance. When it comes to ARM, if you have you're way out of the money. You're at the 75 puts, which you're betting that you're going to close the gap by next week. That's a long shot, though. That's a long shot. That's a drop of 23% in a single week. Can it happen? ARM is down 8% today. The problem is if there is an oversold rebound in these chip names, it'll kill your trade right away. I think what's going on here is a little bit of psychology, which is you're trying to compensate for the losing trade by taking a lot of risk with the ARM trade, betting that's going to pay off. I'm not a fan of that approach because I've seen it fail so many times. And the risk in this one is too much. If you look at the hourly chart, for example, you're really oversold. So if this was my trade for next week, 75, and I've got some appreciation here in the delta, a little bit of appreciation. If we look at the contract, let's look at here, ARM, and we'll go to the 75 puts. There we go for next week. That's worth about 18 or 15 bucks because it's going to require a big drop. It's a lotto ticket, but I would not bet that that's going to be my ticket for coming back, though, because huge chance that it's not going to happen. So we need to regroup here, I think. Rather than going back really big just to compensate for the losing trades on oil and SPY, I don't want to go big on another lotto and then lose and then I got nothing left to fight with. So I'd rather exit the trade and regroup and find a better way that I can segment the amount that I'm putting on ARM on better trades that have better possibility of profitability and then rebuild again the losses that I got from oil and SPY. I think that's the better approach. Tommy T says Passover Monday. You think they will head back during the holiday? I don't know. I don't know. It's really difficult with Israel because, this could be just a maneuver where they give a strike that's not really that strong and everybody says, okay, I think they're done. And the Iranians put their guard down and next thing you know, Israel gives you the real hit over the weekend. I think that's why we have a little bit of fear that's keeping that, if you look at oil here, it's keeping oil a little elevated. I would think, look, if this was it, I would say that oil would go down to 80, but it's still holding. And I think that's part of it is we're not sure if they're done yet. There's a lot of ambiguity. Usually they're not going to attack during a holiday. But before the holiday could have happened. You have a few days before the holiday, so that could happen. I don't think Iran is going to strike back against what we've seen overnight. So I think the risk right now is not coming from the Iranians. The risk is coming from, was it really the full move by Israel or just a maneuver? Can't answer that, to be honest with you. Okay. Ryan, good morning. It's good to see you're feeling better. I hope it's all well and your message found you happy and healthy. Keep up the great work, my friend. Happy to be there here. Thank you so much, Ryan. Appreciate your kind words. Dear Mav, what are your thoughts on TTD and INTC? Kind regards from Germany. I was thinking about these two charts in the morning. I was actually going to include them in the morning brief. But last minute I thought, the daily doesn't look good. So I was going to play a rebound and trade disc. But that bear flag, right? The bear flag is not a favorable pattern. We're losing momentum in the RSI here. So I think that 75 puts will probably be the play for trade desk. It cools off a little bit. And it's going down because of Netflix. It has a reliance on Netflix. So I think it goes down 75. So that's going to be the trade for now. Intel, I was also looking at the daily chart and debating whether we've seen enough here or not. And obviously, the action today with Intel down about 2% suggests that maybe we're not through yet. Maybe we go down to the lower Bollinger Bands and then stabilize before this report comes out. And you have a gap here. And that could be a destination too for Intel to go down to. So for now, for both Intel and Trade Desk, I would say that the trade is a put, not a call. And in Intel's case, I mean, you can play the gap and close it before earnings and just capture that speculation that it's going to close the gap. And the same goes for Trade Desk, but Trade Desk, the target is more identified. It's, I think 75 would be the play here. Okay, hello, Mav. What is the level of support and resistance for SMCI given it's being done big for now? So look, Super Micro, if we look at the support from the daily, just looking at the daily chart that I got here, 727 is my next support, and let's see why. That doesn't look right, because we have a gap here. So let's see why I'm looking at 727 as a point of support. I think it is the gap in the hourly. That's why. Almost. I mean, it's almost at the hourly gap. I don't think it's an accurate number, though. 727. I got to move that up a little bit. I think that's probably going to be in or around here as a more accurate of a support line. So the high of this candle, we always look at this 745, 17. The low here was 745, so we just take 745. I think that should be the support line. Okay, that's a better one. 745 will be my next support. It'll probably be really oversold if we get there. And again, the hourly would produce rebounds or consolidations just to fix the oversold conditions. You've seen it here before, where it produced a rally, actually. You've seen it here, when it produced a little rebound. Then another oversold conditions, then a rebound, and you see it here too, a rebound. So the odds would say that the majority of the juice from the short trade has been already squeezed, and the odds now for a rebound on the hourly, but boy, the daily suggests that you got even more, because look at the change in mind for momentum. It wanted to cross the bullish, changed its mind last minute, confirming the topping in the shoulder. And whatever rebounds it does in the hourly, it cuts through 745. Then we begin to flush down. And I think that this report would be nasty. I think this stack would do a classic .com move, such as a traded high. It might find some stability, then it breaks down and just trades back to the lows here where it began this journey. I mean, that's usually what happens with these bubble kind of stocks, the bubble charts. So depending on how long-term you are, is it better? If you have July puts, if you have September puts, then yeah, I would go more aggressive in Super Micro betting on that crash. I'd go to the 500s, 600s range. If you're short-term, you have to be careful that hourly you might get a rebound. After that rebound, then you pick up some more puts, or you play that rebound if you'd like once you see a sign that you're finding that support. And you probably have to zoom into, let's say, 10 minutes chart and begin to find a bottoming formation. It appears that we're finding some here, but it's too early to say. Anyhow, this is the options for you for Super Micro. The resistance, if there's any rebound, by the way, I think that 800 will still be a sticky number. So 800 will probably stop it. And then it goes down again. GBT 1978. Hey, Mav, hopefully the SPY goes back to 500 sometimes today. I mean, that's what the market maker is hoping for too, because it doesn't really want to pay for those 500. You'll force it to do a squeeze, and it really doesn't want to do that. The problem is the big guys are going down. You see the map. Other stocks are doing just fine. It's the big guys really melting down here. They Meta down 3%. What's up with that? You have NVIDIA, okay, that's understandable. Chip earnings are not coming out pretty good. But I mean, you have Uber down 3%. Here, even Dell beginning to weaken. So A lot of profits being taken out of these technology names right now, and that's keeping the SPY getting hurt. I mean, remember what we talked about, that SPY going higher, even though the breadth was bad because only the big guys were doing good. Now we see that the breadth is getting better and stocks are rebounding, but the big guys are not. The big guys are now continuing to correct. We see the indices suffering. I mean, look at the Qs. You see that impact clearer in the Qs. And that's the problem with the indices. So if you're hoping that SPY 500 will happen today or say next week, you're pretty much betting that we will see a rebound in the technology names today. So you have to watch NVIDIA. And NVIDIA, I mean, it's snapping down now. It couldn't pass above 824. Okay, Apple couldn't pass 165.67. That's still rejection. Tesla, it's a different animal for now, but Microsoft becomes the most important one to watch. And look at this, Microsoft now giving up that support of 444 twice. So all of the technology names showing weakness as we speak right now. Look at the VIX. Whoops, right? See what's going on here? Whoops. It makes it above the 1888 again. And we cross positive. Yeah, I think that the SPY, and we're not going to make it to 500, is actually going to probably flush down even more. And now we have to look at the SPX. 5,000 is gone. That's probably going to exacerbate the move to the downside. Where do we find support after that? How about we do the 100? I think we already talked about this. The 100 will be the next support. SPX 49.35 would be the next support. And that could happen by today. Because, and understand what's going on here, folks. It ain't really the geopolitics that's freaking us out. I think the market right now is fundamentally concerned about this AI mania and the sustainability. When you look at ASML, for example, just look at the damage that happened in a couple of days. And all of this is pricing in a fantasy that was not really reported in this earnings outcome. So we have to price the report that we got, and you saw it in the program, sequentially down, year on year down. We have to price it in, and I think we haven't priced even 20% of that report in. So I think we have to go down and close the gap here, or at least the 700 range, before we say, okay, for sure, we priced in the latest report by ASML. And Taiwan, which I'm going to show you the report over the weekend details, it's the same thing. Year on year, things are good, but we've already priced in a lot of good stuff here. And the, I would say, fair value of the stack based on the report that we got should be around 100, 110. So we still have plenty of room to go in these names. They're going to get oversold in the short-term charts and rebound, that for sure. That's going to happen for sure. And if it happens today, because of the hourly charts getting really oversold, you might get a rebound in the SPY. But just keep in mind that in the long run, they still haven't corrected fully. And that's going to be a problem for the indices, the SPY and the Qs. Okay. Qs looks overdone. Any levels you're looking for an oversold rebound. It goes to the same conversation. You don't want to look at the indices anymore, folks. Okay, we look at them as a reference, but you're going to be thrown off looking at support and resistance in the SPY and the Qs. What you need to look for is the VIX. If that's crossing above 1888, trading higher, I mean, the SPY will keep selling without looking at support. I mean, you see what happened with 5,000, SPX 5,000. The supports you need to look for are in the bigger components of the SPY and the Qs. So you need to look at NVIDIA's chart and figure out whether that's going to hold any support from the moving averages now. If we do the 50, I think that's already lost. So we lost the 50 and we got to retest. So the 50 is gone. Now we have to look at the 100. And the 100 is way down, so we'll probably have the gap filled before. And we have some support in this consolidation range right here. But again, NVIDIA looks like it's ready to do another leg down. And if these big names correct, folks, I think that the indices will suffer, just like they've enjoyed a impulsive rally based on these names. As these names go down, the indices will suffer. So I would not be too fixated on looking at the oversold and overbought on the indices because that could actually throw us off. If you look at the daily chart for the SPY, it is oversold, folks. Right? It is oversold technically, but I think it can get more oversold if we're waiting for NVIDIA to get oversold. Right? If we're waiting for Microsoft daily chart to get more oversold. So I would look at the individual names. If they begin to find bottoms and move higher, then I would say the indices will also do the same. But I would not be fixated in the support and resistance for the indices right now, rather than the VIX and the individual names. Anyhow, imagine holding that Uber trade until today. Yeah. But again, we walked away with the profits, so what are you going to do? You can't really perfectly time everything. Think about this trade that we closed today, or I did. At least I closed. I'm still leaving money at the table, right? But this was dead money just a couple of days ago. Now it's if you look at service now, 720 or 730, excuse me, is what we got, and we sold the 700. $1,600 for next week, 2,000 this week. Okay, so you can't really look at it that way. As I left some money on the table, because you got to be glad that you walked with a profit. We have many other examples where the trades go the other way and we lose money. So making money is a lot better than losing money. But you're not going to look at a trade and say, "Oh my God, I missed on the last 10%, 30%." No, you made your VIG, you're happy with it, you get out. Okay, compassion. Everyone seems to be expecting a rebound. Maybe we just crash from here. Perhaps. I would look at the VIX again, folks. That's your indicator, right? If folks continue to buy puts, they will push the tape down. And I don't want to be too fixated on the indices oversold, overbought, because that can be even more oversold, overbought based on the heavyweights coming down. So just look at the VIX and track the hourly. It's been guiding you with perfection. A little bit of the problem here, and we stayed away from the market. We're not going to trade a lot until we get more clarity. Now we got the positive reaction overnight. And now if we continue in that positive reaction in the VIX, then it will tell you that the market is going down further. Oversold and oversold, it will continue to be oversold until, of course, the weekly charts become more relevant. And the weekly charts, usually oversold, overbought rebounds stronger in the weekly chart. And the weekly is not remotely oversold. You can get even more oversold. And remember, at the end of the day, I kept saying this over and over again. I think we're going to go and erase the entirety of the move from December 13th. That's when the Fed promised rate cuts, and that's not going to happen anymore. So sooner or later, I think we cut through that, and then we stabilize back below the highs of 21, believe it or not. So that's shortest lived bull market in history, right? Anyhow, here's the SPY. Let's plug in the 3 minutes. We're at 395 now. I think that 500 is probably not going to happen for the market maker. It'd be a miracle for them to achieve that. Okay. What is the next support in the Qs? 413th. Then right down to the 200 MA. Look, again, it'll give you the supports, but I don't want you to be too fixated on those supports. So here, if we look at the daily chart, we blew through the lower Bollinger Bands. The gap is gone. If we plug in the moving averages, this is, I believe, the 100. That's gone. So now we have the 200. These are the algorithmic support lines. Can we go all the way down to 200? Possible, right? But before that, plug in my support lines. Let's see if we have something more reasonable here as a support line. We have a reaction right here at around 410. That could be the point of support. But again, folks, if the VIX being bought and catching a bit higher, the algos will sell this thing without really looking at support lines. It just keeps selling until there is an algorithmic reaction that counters that. So if it didn't come from SPX 5000, Where's the algorithmic reaction coming in the Qs? 200 days moving average. That's the only thing that I can see here where the algos might react positively. So again, don't be too fixated on the chart of the indices. Rather than look at the VIX and look at the individual charts of the market, the bigger ones, NVIDIA, Apple, Microsoft, Meta. If we look at Meta here, since we just talked about it, let's see if we can extract something from Meta's chart. Let's do the weekly, see how that looks. Not quite the bearish engulfing candle yet, but you can see that Meta is also changing from bullish to bearish. So this is the bearish momentum that we got in consolidation. Usually, when you have bearish momentum in consolidation, it means that we're hitting higher and vice versa. So if you have bullish momentum after a drop, it means that we're going to head down, further down, because consolidation in a bullish to bearish, usually a process of gathering energy to release it later on. And the same goes from bearish to bullish. But for now, it appears that this crossing, we cannot speculate it's going to be consolidation. It appears that it's going to be a steeper drop in Meta. And if we lose Meta, you put it all together, Meta still got plenty of room to go in the weekly chart. So we could see those drops in the Qs and the SPY going beyond what you're identifying as support or oversold. I think the point is clear. I don't need to hammer it over and over again. Okay, folks. Hey, Mav, what are your thoughts on SPXU 31 put expiration date May 31st as a hedge for the market going up? If you go with the SPXU 31 put, you got to be careful, though, because once they split this thing, the options, I'm not seeing a lot of volume in them. So you got to be careful with those. Because I have a trader who bought them and the move happened. So they bought SPXU calls and the S&P went down. They couldn't get paid for them because there was no volume. There was no bid coming in. So I'd be careful with the pricing on this guy. Maybe you want to look at SH, which is the Pro Short S&P 500. You probably find better volume here in this guy. So a hedge against the market going higher will be a put in this guy. And it's really cheap. You can get one in the money for 45, but I wouldn't do that. I would take the 12. If there's a move higher in the SPY next week. But again, there's no bid here. So we need to figure out another instrument. I don't want to go with the SPXU, to be honest with you, after the split. So we have SPXS. That's another option that we can explore. SPXS, 3 times bearish index. So we're probably going to go with the puts here. Give it for next week will be good. If we go with the 10, let's see if there's enough bid here. Yes, there's enough bid. 14, 15, so you probably pay $15 to take the 10 puts, and that should be a good hedge. In case the market goes up 1%, 2%, you'll see this guy up by about 6% or so, and this bet will pay off. Back to the SPY. We don't need the moving averages. We don't need the Bollinger Bands. The VIX, now it's comfortably above 1888, folks. So it's going to add pressure on the entirety of the market. Here's NVIDIA. Continues to flush. Meta. And Apple. Here we go. Dixie and Vix dildos. Hot day indeed. Thank you for the honest Mav about the indices, key stocks like NVIDIA. Okay. What is a good play for a potential VIX rebound? Well, the VIX is rebounding right now, and you go with the SPY puts. That's the easiest way. Or since you're seeing the weakness in these bigger technology names, maybe you want to begin betting against them in the long run, right? If you've been eyeing puts on Meta for a long time, maybe this is the time to begin picking up longer term puts on Meta. Longer term puts in Microsoft, maybe Amazon too. So I think I would treat it that way. That if the VIX moving higher right now, I think it's moving higher because of concerns about the big caps maybe going way over their heads in anticipating the rate cuts. And this has to be priced down. Look at Amazon weekly chart. This is a huge bearish engulfing candle. Momentum is going to change. Was bullish, bearish, got a correction. We're going to get another one here. And this is just the beginning leg. So I would look at the VIX coming back. In the action that we've seen today is an opportunity to begin opening these shorts against the popular names. When should we abandon the 155 calls in Tesla? I haven't abandoned mine yet. If we look at Tesla 2 minutes, whoops, we flushed down on 148. So that's going to make, let's check the contract. It's not going to lose a lot of value just because of what's happening next week. And that's going to keep the volatility high. But I think if we're going to trade below the lows of the day, that pretty much seals the deal. In the VIX moving higher now above 1888, I would say that for me that would seal the deal that I should be getting out of this trade. I would keep it though. I'm just going to keep it for a little longer here, and I'm not bothered by the loss on it because the score in the super micro was so big. It'll pay for any loss here, so I'm going to keep it for a little longer. Probably around 10:30, I'll make a decision about it. If we're comfortably below the lows of the day, then I'll leave it alone, just cut it out. If we rebound and we're trading at 149.5 again, close to 150, I'll keep it for till the end of the day. Okay, I'm looking. It's looking like the market participants are going into the inverse ETFs. Yes, so we're seeing huge demand for the SQs specifically. This guy right here. I've seen bigger volume than usual, and it continues to appreciate. It is breaking out here. If you look at the weekly chart, beginning to find a sign of life, and folks are pouring more money into it, so it might hit all the way to filling the gap here at 13.7, and then become really overbought and begin to consolidate and come down. But the huge demand on this one I'm noticing, and the SOXS too. The problem with these guys, honestly, if you want to play these guys, they're better off via shares, not options. The options, you'll find out that they're really overpriced, and it will need a huge move for you to make money. I found out that if you buy them as a hedge or just rent these shares during correction, it's the better trade. But again, if you find an opportunity in the options and you get these big moves like we got today, they'll pay off. A move like 8.5%, that'll pay off. But a move 2-3%, not going to pay off. So you're betting on the continuation of these bigger moves, and SOXS has this gap right here at the lows, 46.40, so it could juice a little more gains before it stalls here. Now we'll look at the behavior of the VIX, folks. That's what guides you. That's the number one you should indicator you should be looking at. So in the hourly, remember the hour is not done yet, right? If we close below 1888 for the hour, then it doesn't count. So keep watching that and make your judgment accordingly. If you think that, hey, I've seen enough, the VIX should have went to the gap and closed below the gap, why would it come back here? It's only coming back here because it's going to do this. Then you know we're going down further, and just take the shot. Take the shots, SPY, SQs, whatever you want to take that shot. If you're not sure the VIX is going to make it, hey, do you think it's going to go down rather? Again, you have to wait for that confirmation. Wait for the hourly, so you know it's a failure for sure. Wait till we go to the lows and take those lows. Then you'll know, okay, the VIX failed to rebound, and they're probably going to head down from this point on. I'm going to go with the SPY calls. I'm going to go with NVIDIA rebound play. etc., etc. So let the VIX guide your next decision here in trading. Okay, what's going on with Coinbase? Or we have another one here. When do you think is a good time to get into NDX calls for some rebound play? A lot of you guys asking that question. I think the more people ask it, the less likely we're going to get a rebound in the indices. I think that's going to be the case because, again, I want you to look at the VIX as your guide. If the VIX comes down and it indeed will close below the gap, then I think, yes, you should be taking that rebound play. But for now, it appears that the VIX is hitting higher, so we'll hold in that decision. Let the VIX guide you. The support, the resistance right now in the index or the SPX doesn't really matter. This is what matters because the algorithms are doing the trading and they're not looking at a specific number right now or a moving average or anything. They're just taking their cue from the VIX. If the VIX goes higher, they dump regardless. I mean, this is already a technical violation, folks. You're outside of the lower Bollinger Bands. You're oversold, so the technical violation already happened. The rebound should have happened a long time ago, 3 days ago at least. But so long as the VIX keep giving the algos that feedback, they will continue to sell. So once they stop getting that feedback, with the VIX heading back below the gap, then you want to buy the NDX for a rebound. Okay, what is going on with Coinbase? BTC is up. So BTC is up, but Coinbase, I believe, is down, right? Coinbase just couldn't make it here. I wouldn't take a shot against it, though, until we break 205.77. If that happens, I'll take another shot against Coinbase. We'll be eyeing the 175.50 support line if that happens. Now, Bitcoin has the halving event. It's due now, so there's speculation always and volatility among when we get closer to the halving events. There was one in 2020. Now we have another one. And the assumption is when you reduce the supply of Bitcoin, the value should go higher. But usually we see the opposite happening, that the halving event is probably priced in, and then we see it move to the downside. For now, I would say that since we don't have the certainty yet of Bitcoin moving higher above, again, my threshold, if you watched the show last night, 67,000. It should be 64 or 100. But I'll be more conservative and ask for 67,000. If we pass above that, then okay. Bitcoin's going higher. Probably Coinbase, MicroStrategy, or Robinhood will follow. If we lose 59,224, then boy, we're going to flush down. And that's going to initiate another leg down in Coinbase, MicroStrategy, etc. So for now, I'd rather wait in Coinbase. But we could have another juicy trade here coming once we lose 205.77. So keep an eye on it. MicroStrategy, while we're at it, is acting the same way. And these stacks, look, they want to correct, and they've been begging for a correction for a long time. It's just the price of Bitcoin keeping them from doing these sharp corrections. But the moment Bitcoin gives up, you'll see stunning drops in these names. I mean, MicroStrategy down 2.5%, but could be down just like Super Micro today. Anyhow, we have calls for XOM, looking for the 125.517. Good decision to buy XOM calls right now or wait. So you're above the 20 days moving average. You want to buy the 120 or 125, which is a little outside of the money right now. Here's your risk that you have to be aware of. Right now, it could be sort of a bear flag pattern, and we crack below the 20 again, right? The problem, of course, is what if we're done with the geopolitics for now? What if this was the Israeli response and there is no Iranian counter response after that, and just the matter settles right there? I think that oil corrects because if you look at U.S. oil, for example, this chart is under a correction right now, officially. The MACD is showing it. The RSI is showing it. The Vortex indicator is showing it. So I wouldn't say that this is a good time to buy Exxon calls, just not yet. We need to see some stability in the price of oil. Let it finish the correction. Let it finish the weekend, this weekend, if there's nothing else happening. And then oil drops over the weekend, but finds a footing at some price and begins to move higher again. then that's going to be the point for me to buy Exxon calls. The other risk, of course, if you look at the weekly chart here, uh, you really don't want to buy the calls in any chart when it's looking like this, unless, of course, it breaks above the highs of the pattern. Then at that point, you have a bull flag that is playing out. But buying the calls should have been here, folks, once we got above the 20 weeks moving average. Not right here, where we want to buy in open new positions, unless we pass above the pattern. So my 2 cents, hold on that decision. I don't want you to buy and then take a leg down here below the 20. Okay, I missed most of this correction and feel like if I enter now, I'm chasing a bit, trying to take a longer perspective over the next few weeks and really next 3 to 6 months. Always more chance to make money, right? You're right, but again, I think your problem is mostly psychological, my friend. It's not that you're a bad trader, it's the psychology. So you've been taking shots, big ones, betting on a correction before the correction happened. But now that we have the correction, you didn't take the shot. See, so there's a disconnect in the psychology here. And I think that's the most important problem that we have to hammer as of to why you got skepticism. Because remember our conversation that we had. We talked about the weekly chart of the SPY. The moment you see the crossing, the moment we see it curling down, that's when you fire the big guns so you can capture the correction. We had these conversations before. So I think, again, it's psychology more than really the outlook or the trading dynamics that you need to be aware of here. The good news is, I mean, you look at the weekly chart, we still haven't gotten to the mean yet. So this was a juicy first leg of the correction. Might get a rebound after that because of earnings or whatever. But I think that we have more correction to do. And again, my 2 cents will go below the December 13th. So in timing these puts, the strategy right now, I would say you go to May or June puts on the indices, on the bigger names that went too high that you think are going to correct now. But you have to have some ammo to hedge because of oversold rebounds that you'll see in the hourly and the short-term charts. That's the strategy that I would follow. Somebody shorts the SPY with May or June expiration, then buys weekly call options when the hourly RSI on the SPY becomes really oversold. And the same goes for individual stocks. That's the strategy that I would recommend for now. But of course, we'll do day-to-day trades. We'll do individual names as we see them in the morning briefs. And if you looked at the trades that we've done so far, I think most of them were profitable. We had a few ones that were not profitable. And you'll find out that if you followed some of those trades and you lost on them, what was the problem? The problem is you wanted to have the trade work in a shorter time frame, right? So you had to jump from one trade to the other. Next thing you know, the trade was actually turned out to be profitable at the end. Look at Coinbase, look at Apple, look at ServiceNow. So there are also another lesson here that once you have a trade and you have an outlook on it, you probably want to stick to that so long as it's not above or below your cut target, your a stop loss target. Anyhow, we can talk about this a lot more in lesson learned, but Farouk, request your daily videos. Hold on. Okay, the snoring is just killing me. Please consider the background ticker screen be still instead of moving. The background ticker screen, watching it on my phone, moving background screen makes it difficult to concentrate. The ticker screen, I mean, are we talking about this right here? Because there's a ticker. Or maybe you're talking about the background behind the chart. Yeah, if we usually don't put that in the charts analysis because, yeah, it makes it really hard to see. But sometimes it's probably in like the earnings reviews when we have that background. But thank you for the feedback. We're probably going to have to do it this way instead. Leo, I think Meta closed the gap at 400, 450, or you think that it's going to close the gap at 400. So you want to go with the 450, 425 puts for May 17. Here's Meta. We think it's going to close the gap at 400. I think that this report will be nasty. That's just my 2 cents. So I do agree with you on doing the 450, 425. Let's see how much is that going to cost. Here's Meta. If we do May 450, and then we want to do 425. Now we do have a report coming, so let's see what is the date on this one here. That's going to be April 24th, which is next week. So first consideration is it worth it to go to May, right? Since we have a catalyst coming here. And the answer is, yeah, it is worth it, but you're going to have to do some management. For example, if heading into next week, Meta's down yet another 3-4%, and now you're getting closer to earnings, which is Wednesday. Let's say Tuesday, we're trading at 450, 460, and you're right here, and you've made, let's say, $8 on the contract, $9 on the contract. I would book that profit rather than letting it ride all the way to the report. So the trick is, how do you manage this trade before and after the report? Because if the report produces a pop, then the trade is dead, and the time that you bought here till May doesn't really matter. So again, you probably want to look for an earnings play first as a starter, and if that plays out, then you want to go ahead and add more to it. And the theory goes, if Meta goes down, I mean, it's a possibility always, but it's not going to be via a crash. It's probably going to be a drop, and the continuation of that drop as money begins to come out. If you're betting on a crash, again, you're better off picking something in the 26. That's the problem that I see if going to May in some of these names, that earnings could be a problem. But if you're confident that we're going down, I think it's if you look at the 10th, the pricing for the 17th is the best, really. You can go the 24th, but the 17th will probably give you the better liquidity. I do like it. It's not a bad trade. And you're betting on a correction of Meta of about 7.8%, 10%. I think that's rational. But just be aware that if you do this, remember what I just said just a few minutes ago, long-term puts, short-term calls. So if you do the May, you probably want to buy a hedge. And that hedge would be an out-of-the-money call. Now we're trading at 481. So maybe at around the 500, but that's going to cost a lot as a hedge. See? You need some hedging strategy somehow just to protect from a surge higher in the name. We can figure that out next week, the hedging strategy via calls. It's probably going to be a butterfly spread somehow, so we don't have to overpay for the insurance policy. But for now, if you want to go with the put trade that you just identified for May, go ahead. But you're going to need insurance policy. That's all I'm saying for now. Okay, sorry if I missed it. What are your thoughts on Apple? From Ryan, Apple, if we look at the hourly chart, we might find some stability today, but again, I think that the damage is done, because if you look at the weekly chart, that's what really matters to me. I think we have a bearish engulfing candle, and we're breaking below this range that goes all the way to 23, which means that we're probably going to head down to find some support in the consolidation range right here. We do have some support lines. That's the 200. That comes right at 152. So I think that's going to be my next destination, 152 on Apple, reaching the 200 days moving average. Compassion. Are you in any defense contractors that have shares and wondering if you'd lighten? Not at all, because whether the geopolitics cools off or not, the tailwinds are intact. That we're going to see more demand for Lockheed, more demand for Raytheon. So I do have Lockheed, I do have Raytheon, and I just bought this guy, KTOS. So I do have these three in defense as exposure. I'll keep them. Absolutely keep them. Had a rough start to the week. Almost my biggest loss this year. Wow. Thanks for helping us keep my conviction. Meta, Tesla, Apple puts brought me back. Okay, good, 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 great. That's what we want to hear now. I don't like this music. I'm looking for a few stocks for long-term buys, but I still feel they can correct a bit. They were among the mania stocks like RKLB and LICY. So Rocket Lab, if you want to buy that one, I would still wait for that report because battered, bruised, right? But you want to wait for that report to give you any confirmation that the company is still alive. If you look at LYCI, another name that's not looking good in the chart here. I'd love to see these reports, but yeah, this is a penny stock. You can have some money in it as a wild shot, but you don't want to put serious money here in a penny stock. Daily videos every night. What are we talking about? Daily videos every night. Yes. Request your daily videos. Please consider the background. Yeah, I got it, Ferg. I will. We're gonna move that. Okay. For next time when we do the charts, we'll take these off, so it'll be easier for you guys to follow. And I also got another criticism that the charts are a little too far and folks have to zoom in. So instead of doing this, right, instead of giving you this, I'll zoom a little more in the charts just for us to look at what's immediate, and it becomes clearer and bigger for you to see. So that's what we're going to do from now on. Now, folks, before I sign off, because I got an appointment on, what time is it right now? 9:49. I got an appointment at 10. So, last thought. What are we looking at for the rest of the day? VIX. We're looking at the hourly chart. Are we going to close above 1888? Are we going to make the cross to positive or not? You switch between the hourly and 15. So you get crossings above, sure, that's okay. At the end of the day, is it going to register in the hourly or not? Then, if we don't make it, because this was attempt number 1, maybe this is 2, and there's a failure, and then we take the lows of the day, and we trade below the gap, then that means the market is going higher. There's a rebound, and now you're going to load on rebound plays. Otherwise, if on the hourly we close above 1888 and we make the crossing, then we have more downside to come, and you can buy those puts again for next week and bet on more downside to come. Okay, so that's the conclusion of the live session today. It's all about the VIX. This is the only chart you're watching today, and it guides you to the end. Again, if you see that failure again, second failure, we go back to the lows, take the gap. SPY is heading higher, baby, and you want to buy some rebound plays. You can buy them in the SPY, you can buy them on Tesla, on NVIDIA, whatever you like, because the rebound will be led by the biggest names. They let us down, they lead us up, and the same goes if the VIX makes it above 1888 from an hourly perspective, then probably the bigger names will lead us to the downside. So you can pick your options, whether you're betting on the indices or the individual names, accordingly. But this is my 2 cents. It's my 2 cents. I don't think it's going to make it. That's my call. Anyhow, I got to head out of here, folks. Okay, any next week earnings plays to get in today? Let's do that by the end. I'm going to be back again before the end of the day on Discord, and we'll put some of those thoughts in. Do you recommend any good books or videos to learn, improve technical analysis? Yes, we can, but that's a longer conversation that we have to talk about in a separate video. Corey, thank you so much. Sent you a DM on Discord when you get a chance. Yes, okay, well, that's on my list, okay? Catching up on Discord messages this weekend and Patreon messages, because a lot of you did that, and I appreciate it. I'm going to go over them this weekend. Anyhow, folks, watch the VIX. He'll guide you. Take the lows. Don't hesitate to play rebounds. You close hourly above 1888. Don't hesitate to bet for more downside to come. Take care. Have a great weekend, and we'll be back again before the end of the day in Discord if there's something important.